Hi, welcome traders to this live webinar looking at strategy today. The last time we take a look at intraday breakout and bounce trading, and generally just bounces and breaks. First of all though, before we take a look at the market, be aware that this webinar is shown to a global audience. It may not be suitable for everyone though. Please select your country of residence and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Goody good. So today, be aware that there's a FOMC statement, if I remember correctly, after we already had the ADP coming in higher than expected with green numbers there, PMI as well on the dollar, but also the FOMC meeting minutes, so we can see what the Federal Reserve is thinking about the direction of the economy and the direction of the monetary policy of the U.S. That's today. Friday, also a big event on the dollar with the non-farm payroll and unemployment rate. You just had Nenet's live session probably just a few minutes ago, if I am not mistaken. So that's something that just finished, but next week we'll be back, of course, with session recap and then it's expert opinion, and our educational webinar is not tomorrow because we had that yesterday. So if you didn't catch yesterday, you can find it on the YouTube channel of Apple Markets, and you can take a look at that in the video. All right, so tomorrow not an educational webinar, but we are back next week, Thursday, as always. All right, and Nenet is back actually. Nenet will take care of the next two. I'm back on April 27th with an educational webinar taking a look at entry tactics within the market structure. Excuse me. Alrighty, we've been looking the last 4 weeks in March basically at bounce or breaks at support or resistance. So this is basically kind of the last one that's focusing on that. So if you have any questions, this is a great moment to do so, and we can take a look at any of your questions. No problem. Of course, please let me know through the chat. If you are joining this webinar perhaps for the first time or the second time and you have any questions about some of the terminology or concepts I use, also please feel free to use the chat to reach out and ask anything you would like. All right, and I'll get back to you and clarify some extra things. So, well, basically, a quick note on the euro dollar here. Let's take a look at the daily chart. Basically, what we've been doing is looking at 3 time frames. When looking at bounce or breaks, we've been looking at a combination of 3 time frames. The higher time frame being the strong resistance, the medium time frame being the medium time frame, and the lower time frame being kind of like weaker support or resistance. And basically, I use a couple of things to understand if there's going to be a bounce or break. For instance, confluence. If there's a lot of confluence, that makes the support or resistance stronger. Let me write that down. Confluence. Also, the number of attempts to break. If it's the first time, then basically there's a good chance of a bounce. If it's the second attempt, it's 50-50. The third attempt or higher, then a breakout does occur more often. So confluence and the number of attempts, and of course also the strength. If there are any divergence patterns, lack of momentum, that helps too with looking for a bounce. Strong momentum is typically a breakout. So these are 3 equations that go into whether a support or resistance level breaks. Once I look at a daily chart, and then, or for instance, a daily chart, a higher time frame. Now that depends, of course, if you're using 5, 50-minute chart and 60-minute chart. The higher time frame is actually the 60-minute world. It all depends on which time frame you use. So whatever the high time frame it is that you use, for instance, the daily chart. So I'll be looking at key levels there using tops and bottoms, fractals, fibs for price to reach this decision zone, point of confluence, and I'm looking for a break or bounce at that level. Depending on those 3 factors I just mentioned, confluence, number of attempts, divergence, I would then decide whether a breakout or bounce is more likely. So for instance, here for instance, right here, this was a resistance level, right? And we could even add here, of course, as well. That was a resistance zone, in fact. Maybe even this bottom. So as price got into the zone, was it going to be a breakout or bounce? That depends on those three factors, right? And sometimes it's 50-50, and I might be looking for both the breakout and the bounce. Once I establish a direction, which one I prefer, or perhaps both, I can zoom into lower time frames and then look on the lower time frame yet again for a bounce or break. Or sometimes I stick to this time frame. Sometimes I stick to this time frame and say, okay, I want to see a candlestick pattern here first. Sometimes I can zoom into time frames like this and say, okay, I want a break of support as an indication that price is moving away from that resistance zone. And on the hourly chart, as price is breaking away, for instance, on the 4-hour chart, I might say I'm looking for the next pattern as a continuation. So you can play around with these concepts to kind of look for a combination that is suitable for the time frame that you're looking at, the time frame combinations you're looking at. So daily chart, I could be looking for a bearish bounce. On the 4-hour chart, I could be looking for a bearish breakout, right? And on the hourly chart, I could be looking for basically the bearish bounce here as it hooks back, for instance. So daily chart, I'm looking for the turnaround here. 4-hour chart, I'm looking for the breakout here. And on the hourly chart, I'm looking for the pullback. And that could be the entry. Doesn't always have to be that elaborate, but it could be. That depends on, you could just use these tools to set up basically a trading plan that thinks that you feel good with, that matches what you're looking for. So these are variables that you can decide per time, per case. So for instance, on this time frame here, there is a bit of a wick. That is not something I would consider to be a good breakout. I would not consider that a reversal either. But this daily candle might consider to be a good turnaround candle, right? So with that candle in the pocket, let's say, I could zoom into lower time frames and look for some continuation setups to the downside, right? This daily candle is not a good bearish turnaround candle, bounce candle. But it's not a good breakout candle either, because a breakout candle would have a good candle close near the high. A bearish candle would have, for instance, a big wick or would be a pin bar. This is not a pin bar either. So looking at the next, one of the most important clues in understanding whether a bounce or break is actually going to happen is looking at candlesticks. So confluence, number of attempts, and then divergence is understanding whether I'm looking for a bounce or break. First step is decision zones, right? Decide the decision zones. I use fractals, tops and bottoms, fibs. Then understand step 2 is understanding what will happen, bounce or break at that decision zone using these 3 things. It could be both, or only one direction, or maybe nothing, right? So establish the decision zones, DC, or point of confluence. 2, establish what will happen at that decision zone, a bounce or break, or nothing, or both. And 3, wait for candlesticks to confirm whether what we expect will happen is happening. And then zoom into time frame lower or 2 times frame lower to actually trade it. So that's how you can trade support or resistance. So this daily candle, for instance, we could take a look at it 28th of March. We could zoom down to a time frame, for instance, 28th of March. There we go. So that is here. So after this price action, this is basically the daily candle that is indicating the bearishness. Excuse me. So let's see. I don't see anything particular at this spot, but maybe a trend line like this. Yeah, that's good. So we have the daily, we have a reaction. So on a 4-hour chart, we can say, okay, a break of this trend line could be the entry. We don't even have to look at the hourly chart. Or if you want to be very precise, in this case, you could even say, okay, this is the breakout candle. Then I zoom into the hourly chart, and I'm looking for maybe a small little bear flag, for instance, like this, for continuation, right? So that could be the entry on the hourly chart. So that could be the breakout continuation on a lower time frame. So this is how you can combine it. Let's take a look at 3 different time frames. Let's take a look at now, first of all. All right. Now, not every time, of course, price is going to be at a key decision zone. For instance, here, this is a trend line that's a key decision zone around here with the S1 and the Keltner, but price is not at that zone as yet, right? So price at the moment is in the middle. So I don't think at the daily chart is at a critical zone. So that's the first step. So we really don't have that on the daily chart at this moment. So on the daily chart, I don't think there's anything to look at. But we can continue maybe on a 4-hour chart. That's different, right? So on a 4-hour chart, we can say that perhaps, yeah, it's perhaps that the oscillator is turning here. I don't see any particular key level at this spot either that I think is interesting for the 4-hour chart. Perhaps on the hourly chart, we do have divergence on the hourly chart. That's a pattern, of course. That could indicate that maybe a bullish bounce could occur. And we've completed also 5 waves lower, so that's another pattern. But we don't have any key support resistance levels, I think, at this moment. Maybe here. But that's, yeah, it's from a support and resistance point of view, not so much. Not as support. Resistance could be different. If price were to, for instance, retrace up to the 38 and the weekly pivot point, that could be a strong resistance spot on the hourly chart. So that's something that might be interesting if price gets to that zone. That could be an interesting decision zone on the hourly chart. So I could wait for price to get up there, see if there's a bounce. I'm expecting a bounce at this level. See if there is a bounce, if the 1-hour chart is showing a bounce. Then I could zoom into the 15-minute chart and see if there is a good exhaustion wick. On a 50-minute chart, perhaps look for some kind of head and shoulders pattern and see if I can trade the bounce there. All right. Now, if I'm a wave trader, this is looking at support and resistance primarily, right? If I'm a wave trader and I look at a lot of waves, and you can look at my wave analysis in the morning. This is not a webinar about waves, but this is just to show you the difference between how to approach the market. As a wave trader, I'm looking at a potential inverted head and shoulders pattern. There's plenty of divergence between these bottoms. Price is also broken out of this bearish channel, and it could be a break pullback, and there could be an ABC zigzag up to that weekly pivot point, for instance. So looking at patterns, waves, chart patterns, channels, divergence, I think that there's a good, interesting potential for price to turn here, but not from a support or resistance point of view necessarily, I think. Now on an hourly chart, you might say, hey, this is support, right? So we could use that potentially. And that's true. So we could take a look at the candles here in this zone. If there are any 1-hour candles, not on the daily or 4-hour chart, but on an hourly chart, looking at those support levels might make sense. Looking for a bounce, I think, makes sense. So from this point of view, from an hourly perspective, this could be a decision zone. There's a good chance of a bullish bounce. Now the third step is waiting for those candles to confirm that. Some bullish candlestick reaction here, lower or right here, would kind of make the chance higher that indeed a bullish bounce will occur up to that level. So nothing to be seen on the daily chart, but on the hourly chart, that might be valid. On a daily chart, it would be more prudent to look for lower level, or more prudent probably to look for price to get up either to this level or this level for a turn. On a daily chart, it looks to be in the middle, let's say. But an hourly chart, that could be different. So it also depends on which time frame we use or want to use or analyze. So does that make sense? Any questions perhaps from what we've discussed under your dollar so far? If so, please let me know through the chat, as I already mentioned earlier. All right. In the meantime, I think we can take a look at a different pair, such as the pound, and we can take a look at the dollar yen. And yesterday I was talking about the fact that I would like to see price make a hook back to fall, and it's making this hook back, so that's good. As expected, it's making this this turn, and this fib is still valid right here. So, but before diving into that, let's take a look at the daily chart. Let me just 1 second, give me a second to get rid of this fib for the 4-hour and 1-hour chart. There we go, okay. So, what are key levels on this daily chart? So I think obviously this top, this one already has been used. We could think about even this trend line being broken, this trend line, and these fibs, plus pivot points. So from this perspective, price is using the S1, seems to be going back to Epic's confluence of resistance at this point. As you can see, price has a weekly pivot point, a broken trend line, a resistance trend line. So let's see how price responds at that weekly pivot point. I would be, at this moment, really okay with looking at both a bounce or break. So I would be open to looking at this daily candle and seeing how it reacts to this weekly pivot point. That's one thing. On a 4-hour chart, basically, I'm trying to establish if a break or bounce is happening here. Because on the daily chart, I just said that from my perspective, both is equally possible. And maybe I should dive into why. One of the reasons is, one of the 3 things we just mentioned is, first of all, is the confluence, right? So there is confluence, pretty strong confluence of resistance. So that's in favor of a bounce. The number of attempts. From my perspective, this is attempt number 2. So that does make it 50-50. This is 1. This is quite an early hook back, and it seems to be actually making a triangle. A triangle like that, really, although it broke this resistance trend line, we want to be aware of other support levels. So a triangle like that could really break to both sides. And the third one is divergence. But on the daily chart, there is really no divergence. In fact, if anything, there is momentum to the upside, not so much momentum to the downside as yet. So from this perspective, to me, it's really a wish-wash. It's both are possible. So I would certainly keep an eye on today's daily candle. I do think that the S1 and the pivot point are both decision zones, and I'll definitely keep an eye on the daily candle to see how the candle reacts to those levels. But otherwise, if price were to break below the S1 or the pivot point, I'll keep an eye on how the candle looks like as it breaks out. But at this moment, I'm open to both. So we can move on to the daily chart, 4-hour chart, and analyze this. And at this moment, I'm open to both a bounce or a break. So basically, we're looking for candlestick reactions in this zone. This is a candle with a wick, yet still bullish. So if this candle, the current candle, were to close bearish or with another wick, I think that is a decent chance it will become a turnaround. If you have a candle like this that has wick but still closes bullish and is still closing above the previous candle close, then it might be a bit of a doubtful candle still. The best pin bars are ones that are closed, have a body in the opposite direction, close within the previous candle body. So this is definitely not a strong candle. It's a weak candle, but it's not a great reversal candle. It's an okay reversal candle. Candles like this typically are best supported by another candle that is looking the same. Two candles like this with a wick like that changes things. Or even better, if the next candle is even bearish, for instance, right? So that helps. This one is kind of on the border in a way. This one is definitely not a bearish candle, right? Obviously, it's not a strong candle either, but not a bearish candle. So we're having the bounce so far to the upside. So far, we don't see a strong case for a bounce back down. But if the next candle were to hit this zone and then cause, for instance, this candle closes like this, but the next candle is something like that opens here, for instance, shoots up, and then down again, and closes here, then we would have a candle that is like this, bearish, big wick on top, and small wick at the bottom. That would be a bounce on the 4-hour chart. Or perhaps we would have a bullish candle and another bullish candle. That's a breakout. And in that case, I would be looking on the hourly chart for a bull flag and a break of that bull flag for continuation upwards. So it depends on what price is showing in this zone, what kind of price action on the 4-hour chart. That will give me this kind of more information about the up or downside, the bounce or break, and then I can zoom in to lower time frames. So I was talking about the potential for price to retrace into this zone yesterday. It's finally doing so, but will I trade it? How will I trade it? Yesterday I was talking only about the bounce. I think I'm not sure anymore. But at this moment, I'm looking for potentially both. Depends on the candlesticks here. And then I can zoom into a lower time frame to trade that. So on the hourly chart, for instance, after the 4-hour candle signals that, then there could be, for instance, this kind of pattern. Right? So what could I trade here? Well, I could trade the 4-hour candle, in this case, is bearish. I could trade, for instance, the break below this consolidation like this. Do you see that? A breakout right there. Could be a way to trade the hourly chart. All right? Or if price is, for instance, breaking to the upside, like this, then or as I already explained, look for instance, a triangle or a bull flag. I will be looking for a break of the bull flag to the upside. So I could be looking for breaks here to up or down, or even for a bounce. For instance, price moves up, bounces back down like this, hooks back, and makes kind of a small hook back like this. That could be a bounce, or this could be a bounce that are both interesting for a further downside instead of the breakout like this. Do you see my point? So those are all methods that could be used on an hourly chart. At this moment, pretty choppy chart, but doesn't have to stay that way. And I think it's interesting zone to keep an eye on. Alrighty. So let's take a look. For instance, the dollar yen. Next one. Dollar yen on the daily chart, we see an S1. I was talking about it yesterday about, if I remember correctly, about this daily candle and what kind of wick we have, that could be an interesting signal. And look, this was exactly pretty darn big wick here on the daily chart at the S1. Not a great reversal signal necessarily, but it depends on context too. On a daily chart, a wick like that has a bit more importance than a 4-hour chart, for instance. So you can be, let's say, a bit more tolerant with the daily chart with a wick like this, but still a bearish close. The candle itself, high and low difference, about 66 pips, and the close 20 pips. So more than 2/3 of this candle is wick. That's a good signal on the daily chart. We also have a bottom here and S1, that's a decision zone. So then on the 4-hour chart, we can take a look right here. We could be looking for potential breaks or bounces. So one way could be to, for instance, put a fib from here to here and look for a bounce at one of these fibs, then look at the hourly chart and try to either trade the bounce or try to take the break after the bounce, for instance, like this. All right, so that could be a way. This could be the breakout candle right here, for instance. Right here, this could be the breakout candle. And that could be basically trading the daily bounce, the 4-hour bounce, and the hourly breakout. You see that? So this could have been the trigger candle. Let's see. What else? From a time factor rule, this would have been the entry candle. 1, 2, 3, 4, 5, 6. This would have been the entry candle. Other ways could have been, let me think for a second, fibs. Three candles in a row we don't have at this spot. Of course, a more riskier entry could have been, for instance, taking the immediate candle bounce at the fibs, like taking this candle reaction to it. All right, so that's about it. Now at this moment, price is at the weekly pivot point, right? So let's take a look at the daily chart again. We can see that a bounce or break could both be possible. I'm inclined to a breakout just from an Elliott wave perspective. But in theory, that could be both possible. 4-hour chart, all right, 4-hour chart, this is a pretty good zone. Here's a resistance. Here's a pivot point. So at this moment, you can see that was a strong candle. That was indicating breakout potential. Why? Because the candle had a good size and the candle high was, or close was near the high. So that's what it did. But the current candle is having some struggle. So if this candle closes, something like this, it could encounter a retracement. So let's see how this candle reacts to this level. As I said, am more inclined to a bounce or breakout, excuse me, here. I was more inclined to a bounce and a breakout here due to my wave analysis that is indicating that there's a chance of a expanded correction like this. But I guess that this could be both a break and bounce spot. So let's see how this 4-hour candle closes. If it is bearish, for instance, maybe 5 to 6 candles, not breaking this high, and it makes a hook back like that, or the breakout like this could still be a way to trade a potential bounce. If the 4-hour chart, because if the 4-hour candle closes near the high like this, then I would definitely be looking for a continuation. Then I would zoom into the hourly chart, wait for a small triangle, perhaps like this, wait for a breakout to continue. So it's at a decision spot. Let's see what kind of information we get from the candles at this zone. But in my view, I would be looking for a breakout, I think. I think the bounce will not be that big. One of the reasons is that I think that this momentum is over. Looking at the fact that price has 1, 2, 3, 4, 5, 6 candles, this is 7th, I think this would be expanded correction. So from that perspective, I think that breakout is more likely. Because a breakout is more likely, I think the reaction here will be mild before price makes a bounce. So I stand corrected. I would probably wait for a bounce and breakout to continue. So I'm looking for some chart pattern here and then a continuation. Let's take a look at the Aussie, for instance. Alrighty. So this was, again, an attempt to break, but failed. Rushing down now, and we're attempting to test this support right in here. S2, moving average, and the Keltner, pretty strong decision zone, I would say. All right, now if price, this is a bit annoying when price misses it a bit. So not sure at this moment. At this point, it's testing the S1. And this resistance trend line. If you're not sure about the zone, if you're not sure on the daily chart, if it's really at a good zone, you could skip it. If you're not sure if the 4-hour chart is really at a good zone, you can skip it. There's nothing that forces us, any one of us, to trade a particular pair at any time. We can shop around in a way. I would be inclined to say the S2 is a potential bouncing spot, but I'm not sure if price has really hit that level or not. So that's something that is kind of a question mark at this moment. But if it does break above the S1 with a good 4-hour candle, I think it's a good breakout territory. On an hourly chart, I could look for a pullback. For instance, the 4-hour chart would have a breakout candle. The hourly chart, I could look for a pullback. And on a 50-minute chart, it could look like this. And I could look for a continuation here on the 15 up to that pivot point. So this is how I can use time frames to look for the breakout to the upside. Now, price could still get down to that S2. And the other alternative is that price doesn't break above resistance, but in fact breaks above, or below, I should say, the support level. So a breakout here, for instance, this could be maybe a zone where price makes an attempt to the downside. This is attempt number 2. If you compare, this is the first, this is the original depends on your count. You could also say this is the second, or you can count from here. 1, 2, 3. This is the fourth attempt. All of those are equally valid. So a breakout to the downside might be likely, considering the fact that it's this, fourth attempt. If it breaks, because it's in a triangle, so it could break both ways. In fact, if it breaks to the downside. Alrighty, folks. Anyone have a particular currency pair in mind? We can take a look at that. Always keep in mind that the first step is finding the decision zone. And on an Aussie, on the daily chart, I'm not sure. It could be okay. Find the decision zone of the time frame you like. S2 bounce, the S1 break, and plus the trend lines on the 4-hour chart. Those could be decision zones, right? On this Aussie. Maybe not the best one, but I think we were talking about gold yesterday, for instance. And a bit of a wick here. Not a great reversal candle, but definitely not a good breakout candle either, for instance, right? So this is kind of weakness. On the daily chart, I think that's a sufficient wick to say that's a bounce. And indeed, look at that, boom, gold falling nicely. Talked about that yesterday as well. Mary is talking about the Swiss yen. So I realized, let's take a look at that. I realized that some of these steps might be confusing. What do you do first? Always think about it this way. First, you got to decide the decision zone. If there is no decision zone on that time frame, you can go to other currencies, or you can look at other time frames to see if on a lower or higher time frame there is a decision zone, if you feel comfortable with that. Then you want to assess the strength of that zone and whether a bounce or break or both or nothing seems likely. And then you want to keep that in mind with your trading decisions. Then you want to keep your eye on candlestick reactions for that time frame, and you can zoom in, of course, to find ways to trade the reaction. Bounce break, and zoom in again, perhaps for another bounce break. So let's take a look at that Swiss yen. Let me open it. Swiss yen. So it's not a method really that, of course, it's not. It requires some analysis, some time to view the charts and look at the charts and make decisions on that, right? This is not a, let's say, a cookie cutter, where do I enter right now kind of style. So, alrighty, Swiss yen. Let me get rid of the Admiral Markets mini terminal, very useful otherwise, but for the moment I want to give you more space to view the charts. So one thing that you could do is add fractals to see key tops and bottoms, for instance, and we see that at this moment, here's a bottom that's pretty far away. We can maybe add some broken tops, perhaps. This level, perhaps like that. Here's a fractal. Alrighty. Resistance we can add here. We can also add a fib, perhaps. We can think about using this swing high, swing low. All right. And we see that the Swiss yen had a daily wick 2 with the S2 and a green line. This was the first approach to that level. You don't have to only use fractals, but you can use tops and bottoms too, of course. And price is bouncing away from that. So at this moment, I would say that the next one is S3 and this green line, or the orange line perhaps in the 23.6 fib. Price did break through the 38.2 fib. So eventually I would expect it to go to the 50, but it looks like it's making a hook back first. So we might want to keep an eye on there we go. We want to keep an eye on this fib too. Like that. Alrighty. And keep an eye on this zone for a turnaround back down to that 50 fib of the larger swing. All right. So at this moment, price is breaking above the S1. So we can zoom into lower time frames because it's basically bouncing at this zone. And we know that it could still bounce up to a heavy resistance zone up in here. So what does that mean is that, okay, the bounce has already occurred, but maybe there's still a part of it that we can catch as a continuation. All right, so we can zoom in. We're trying to catch the continuation of the bounce, basically up to that resistance zone. Does that make sense? So on a 4-hour chart, we can look for that. All right. So on a 4-hour chart, for instance, we could have put a fib like this and from here to here, and consider these fibs to be bouncing spots. We could count candles, 1, 2, 3, 4, 5, 6. This was the 6th candle. That could be a bouncing spot too. We can look for breakouts of trend lines, for instance, if they're available, and say, okay, this is perhaps the breakout candle right here. So these are bounces basically at the fib and time fractor, and this is a breakout, not only breaking out above the trend line, but also the S1. So we're now in a breakout. We're here in a bounce. This is a breakout. So these were trades of the past, here, perhaps here. This one is a potential new one as it breaks out to the pivot point. So we can now zoom into the outer chart. It could possible actually to just trade this breakout. The candle itself has a close that is near the high, a decent candle. So it could be worth it right there, an entry right now, in fact, with a stop loss, either a risky stop loss below these lows or more spacious stop loss below the fractal and targeting the weekly pivot point, for instance. That would give us a reward box that is this big, a risk box that is either this big or this big. The first one would give us 68 versus 45 versus 80. So the tighter stop loss will give us a good reward to risk. The looser one would make it less than 1-to-1 reward to risk. So that's something we can consider too. Is this enough space for us to trade the breakout? If it isn't, if we use a tighter one, it might be enough. If it isn't, we can always zoom into the hourly chart as well and say, okay, the 4-hour chart does have a breakout candle, but let me try to get a different entry. Let me try to get, for instance, a bounce. I could put a fib on this particular breakout, for instance. Try to see if there's some reaction into these fib levels for a turnaround. I could look for a retracement and bounce. 5 to 6 candles not breaking this bottom could also be indicating a continuation. And then I can use this bottom for a stop loss. So the 4-hour breakout candle is possible, but doesn't have to be. You can use the 1-hour chart or the even lower perhaps. It doesn't have to be. It could be the 32 or the 15 to look for kind of the pullback and continue. 50-minute chart, if there's a bull flag like this, back to the S1, and it breaks the bull flag, that could be a breakout, for instance, on the 15-minute chart. Excuse me. So all basically still within that same paradigm where price is bouncing off the daily and trying to take the bounce back to the next decision zone. So trying to trade that continuation. Trading continuations is fine, but of course, eventually, if we're trading a continuation of the continuation of the continuation, you might bump into some divergence or lack of momentum, and in that case, or divergence patterns. And in that case, price might not make much continuation anymore. So basically, we don't have to wait necessarily for price to be at the zone like this or this. When we look at decision zones, price is either at it or moving away from it. If it's at it, we're looking for a break or bounce. So at the blue circle, we're looking for either a bearish break or a bullish bounce. At the red circle, we're looking for a bullish break or a bearish bounce, right? But as price moves away from it, let's say we're in a trend to the upside, and price has hooked back to a decision zone and has bounced already, for instance. Or price is moving up and has broken through a key resistance and it's basically has broken already. So at that point, and the next resistance up in here. So in that point of view, we trade the breakout, or we can zoom in and try to look for the pullback continuation or the immediate breakout, trying to trade actually the continuation after the breakout, either by waiting for a pullback or another breakout. So if here's a resistance, so if here's the resistance zone, and here's a resistance zone, and price is approaching it, that, oh, is it going to be a bearish break, a bearish bounce, or a bullish break? Oh, it's breaking, right? That breakout could be tradable, but also on the lower time frame, the pullback and continuation, or retracement and continuation like this are also tradable. The continuation to fill up this zone, basically, to use that space, especially if it's trending, is definitely possible too. So price is tradable at the zone or as it moves away from the zone. As it moves away from the zone, it's best if it's trending and not in a range, for instance. Range is best to trade at the decision zone, at support or resistance. If it's trending, it's good to trade the follow through of that zone, but not too close to this to the target. For instance, once again, if this is the resistance and this is the resistance, price is broken above it, hooked back, bounced, and is now approaching the next level, right? Adding another position here is probably a bit too close to the next decision zone. But adding a position here, and so this is not good, but adding at the green circle or the next green circle, those could be good because there's still enough space to that resistance. So this is how we can trade at zones or when price moves away from zones. Decision zones. That's why I like to use the Fibonacci sequence level as well, especially on a 1 hour chart, for instance. Let's see what the Swiss yen is saying. Oops, all right, there we go. So you can see it a bit better. So it gives great zones. Let me show you. Alrighty. So typically the best zone is after it breaks the third level. This is the base level. The pink, purple is 1, 2, 3, 4, 5. All right. Typically the best is between 3 and 4, 4 and 5, or 5 and 6. 5 and 6 for pound yen, pound odd, euro yen, those bigger moving currency pairs. So you can see price moved pretty straightforward down to 2, kind of retraced at 2, then went down to 3, hooked back to 1, went down to 4, hooked back to 3, went down to 5. Doesn't have to always be that nice, and this is a pretty nice example of price using these levels, but it doesn't have to be always that perfect, right? And this is one that I didn't choose, Mary chose for us, but these levels are the ones I use for the 1 hour and 4 hour charts. I use different fib sequence levels for 15 and 5-minute chart. Daily chart requires even other levels, like starting with 233 probably, fib sequence levels. This is 55 pips. You can see that here's the best zone. So as price approaches basically the first time, we can expect a bounce. Pretty good chance. But the second time, we could expect that breakout to occur, and we can expect that space to the fourth level. So as price is breaking here, let's say we missed the breakout, but we can still try to trade the continuation down to that level. That's what I'm talking about. So here we might expect a bounce, here we might expect a breakout, and here we can still try to trade the continuation down to that next level, because that's where we expect price to reach. Here we're testing it for the first time, so we might expect a bounce. Not all of these things are tradable, or should we want to trade. It's also a question of anticipating and making sure that we don't trade or skip it or wait. Sometimes, yes, to take trades. All right, this is a spot. This is the second attempt, so we might expect both a bounce or break. It bounced. But this is the third, so not surprisingly, we broke. This is the fourth, so finally we get a bigger breakout. But here you can see, just because we're finally breaking doesn't mean that here, for instance, we cannot try to get the continuation down to that fifth level. So let's take a look at that continuation spot here. And where was it? Here. All right. So we know that this is the fourth attempt. Price is breaking the fourth time. So we have a lot of space down to the fifth level. So price has moved below a key level, has broken through it. We missed the breakout. Now we're looking for the continuation. So we can zoom in. Continuation is always best to zoom in, not necessarily to the 50-minute chart. If you're working with a daily chart, you can zoom in to the 4-hour chart. If you're working with a 4-hour, you can zoom to the hourly. I was working with an hourly, so I zoom into the 50. And I missed the breakout, but I'm looking for the continuation. So a pullback like this, a flag like this, and then a break of that flag like that, and we get the continuation to the next level, right? This is a zone right here. It broke through this, got a good chance that it goes to the next level. So it's still right at the top, so there's still space. A breakout here, for instance, there's not much space. And it has already traveled a lot of distance. Is that a good breakout? Probably not, because price has already been too close to the target. When it's close to that target or close to a decision zone, it's best to zoom back out to an hourly chart or to the higher time frame, and then look again for a bounce or break at this zone. Right? Do the analysis at the decision zone. What seems more likely, a bounce or break? Is there divergence? How many number of attempts? And I have my brain freeze at the moment. Number of attempts, divergence, the strength, the confluence, of course, sorry, of that level. And then decide, with that decision zone, see a bounce, break, nothing, or both. So if a 50-minute chart, or any lower time frame is very close to the decision zone, it's best to move away from that again. Go back to the higher time frame. Here, it's good to stay on this time frame because we have plenty of space. Even here, it's okay, or here, it's okay. But as we get closer, and we get further away from the previous key decision zone, and we get closer and closer to the next key decision zone, then that balance changes, and it's good to then not stick on this time frame. Let's take a last look. After this, I guess we'll wrap it up because we're getting close to the end of the webinar. Here, for instance, this was the previous one. So this, for instance, could be a breakout right here. And it broke, hooked back, so you have to live through a bit of pullback, but then still continued. And it took long before the target got hit. So, it doesn't guarantee that the target will be hit quickly. That's why sometimes trade management helps. Got to be aware of that too. That's a different story though. All right, so, but basically the target did get hit later on. And even here, for instance, taking here another attempt, a stab, basically as they call it, to reach that level, worked out well. But not maybe here. I don't think that anyone should stick in that trade for that long. Typically, a day is already quite long for 50-minute charts. So here we're already at a day. So after a day, I would seriously tighten the trail stop and move it probably to break even, and probably go right above these tops, right, to move it to break even and get taken out here. I see the price makes a pullback. I might still be tempted maybe to trade this bounce, for instance, or the next breakout. But it's good to get out of this first position and wait for new confirmation signals that price is going in that direction. All right, folks. So any questions? This is the time to ask. I hope this material will help you. I know it's maybe not the easiest to wrap your head around trading bounces and breaks in different ways, but take it step by step, practice with it, use own parts of it perhaps, and I think it might give you kind of a better read on decision zones, how to anticipate bounce or breaks, how to read price action at bounce or breaks, how to trade away from decision zones, etc. If you're interested in the DAX, take a look at the front page here. More information about trading the DAX. If you're interested in some of these indicators that I've shown, you can check that out as well with the MetaTrader 4 Supreme Edition. Go to admiralmarkets.com, click on Platforms, and then MT4 Supreme Edition. For more analytics, I guess you know where, you know the drill, fundamental technical waves, articles as well, education. Please check out the webinars too for more material on that. I will have a bit less live webinars in April than usual. I'm taking some time off, not the whole month, but just here and there. So I will have some webinars in the next few weeks, but maybe a bit less. No, not maybe, but a bit less than usual. In April, I'll be back. In May, I'll be back full swing again, as you know me, with the usual weekly webinars, but just a few less than usual the upcoming weeks. I don't see any questions. If you still have any questions, of course, please feel free to use upcoming webinars to ask, or use the feedback form after this to reach out to my email. And that's about it for today. Wish you all great trading, folks, and see you soon. Cheers.